Cryptocurrency, a word that excites some, terrifies others, and confuses almost everyone. From Bitcoin to Ethereum, Solana to Dogecoin, digital currencies have transformed from niche experiments into a global financial phenomenon. But what does it really mean for you? Is crypto the future of money or just a digital mirage? Today, we'll explore the complete story, from the birth of Bitcoin, the meteoric booms, devastating busts, and the current innovations reshaping finance. By the end of this video, you'll understand not just the hype, but the reality, the risks, and the opportunities in cryptocurrency. We'll uncover the early visionaries who bet everything on a digital dream, the explosive price surges that created millionaires overnight, the market crashes that devastated fortunes, and the innovations that could redefine how we transact and store value. Stay with us, because whether you invest in crypto or simply want to understand the future of money, this story affects everyone. And if you're ready to see beyond the headlines, you'll want to watch closely. The rise of cryptocurrency. Let's go back to 2009. A mysterious figure known only as Satoshi Nakamoto introduced Bitcoin. The idea was simple yet revolutionary: a decentralized digital currency operating without banks or governments, relying solely on a peer-to-peer network and cryptography. This wasn't just a new type of money, it was a new way of thinking about value. Bitcoin was designed with scarcity in mind. Only 21 million coins would ever exist. This digital scarcity mirrored gold, earning Bitcoin the nickname digital gold. Early adopters were visionaries, developers, and risk-takers who believed in a world where financial freedom and autonomy mattered more than centralized control. Over the next few years, Bitcoin slowly gained traction. Exchanges like MTGOX emerged, allowing people to buy, sell, and trade Bitcoin. First, it was a novelty. Then it became an investment. By 2013, Bitcoin hit $1,000 for the first time, a milestone that made headlines and brought the idea of cryptocurrency into mainstream consciousness. But it wasn't just Bitcoin. Soon, new cryptocurrencies emerged: Ethereum, Litecoin, Ripple, and countless others. Ethereum, in particular, introduced the idea of smart contracts, programmable code that could run on the blockchain, opening endless possibilities beyond simple money transfers. The rise of cryptocurrency was more than just finance. It was the birth of a technological revolution.
The boom. From 2017 onward, cryptocurrency exploded. Bitcoin's price surged from $1,000 to nearly $20,000 in a single year. But this wasn't just about luck. Several forces drove the boom. First, institutional interest grew. Hedge funds, investment firms, and corporations began exploring crypto, legitimizing the market and bringing massive capital inflows. Second, media hype created a frenzy. Headlines promised overnight wealth, triggering FOMO, the fear of missing out, which drove a massive wave of new investors. Third, technological advances, particularly Ethereum's smart contracts, unlocked new possibilities, from decentralized finance to gaming applications. Stories of early adopters turning small investments into millions became legend. Yet this boom also revealed a harsh reality: volatility. Many new coins, known as altcoins, promised groundbreaking solutions. Most failed, some succeeded spectacularly. But the boom firmly placed cryptocurrency on the global stage. People realized this wasn't a fad. It was a disruptive financial force. The bust. But booms are followed by busts. In early 2018, Bitcoin plunged from nearly $20,000 to under $4,000. Billions vanished, and many investors were devastated. Why did it happen? Government regulation played a major role. From the US to South Korea, authorities imposed new rules on ICOs and cryptocurrency exchanges. Security breaches also shook confidence. Exchanges like MTGOX and Coincheck lost millions to hacks, highlighting the vulnerabilities of this new digital economy.
This period also taught lessons about speculation. Many people invested blindly, lured by hype. The bust reminded the world that crypto, while offering enormous potential, was risky, volatile, and unforgiving. Yet, even in chaos, opportunities emerged. Investors who held their coins or bought during the dip profited immensely when markets recovered. The bust wasn't the end. It was a painful but necessary step in the maturation of the market. The current landscape. Fast forward to today. Cryptocurrency has matured. Volatility remains, but innovation and adoption are reshaping the market. Key developments. Decentralized finance. Platforms like Aave and Compound allow peer-to-peer lending and borrowing without banks. Users can earn interest or borrow instantly using smart contracts. Non-fungible tokens, NFTs, have created new markets for digital art, music, and gaming. A digital artist can now sell a single NFT for millions, transforming creative industries. Corporate adoption. Companies such as Tesla, PayPal, and Shopify have integrated cryptocurrency into payments and treasury operations. Blockchain beyond currency. Applications in supply chain, voting, identity verification, and healthcare show the versatility of blockchain technology. Challenges. Regulatory uncertainty remains a major hurdle. Environmental concerns over mining energy consumption. Scams, phishing attacks, and unvetted projects persist. Expert opinions. Analysts predict continued growth if regulation is clear and technology scales sustainably. Central bank digital currencies, CBDCs, are being explored worldwide, potentially complementing or competing with decentralized coins. The future of cryptocurrency. What lies ahead? There are multiple possibilities. Mass adoption could make cryptocurrency a daily part of financial life. Alternatively, cryptocurrencies could face heavy regulation or technological obsolescence. Central bank digital currencies are emerging worldwide, potentially competing with decentralized coins. Investors must stay informed. The decisions made by regulators, innovators, and investors today will define the future. Cryptocurrency is not just a market, it's a movement, a technological revolution, and a financial experiment all rolled into one. The next 10 years will tell whether cryptocurrencies will dominate global finance or remain a volatile niche. Cryptocurrency is a journey of innovation, risk, and opportunity. From its humble beginnings to explosive booms, dramatic busts, and ongoing innovation, one thing is clear. This is a financial revolution that cannot be ignored. Whether crypto becomes the backbone of global finance or remains a volatile niche, it will impact our world. Informed, strategic engagement is the key. Remember, every decision you make today, whether investing, learning, or exploring, shapes your financial future in this digital era. If you found this video insightful, hit like, subscribe, and share your thoughts in the comments. Do you see cryptocurrency as the future of money or a risky digital experiment? Your opinion matters. Stay informed, stay prepared, and keep exploring the world of finance.